Hello friends, in the series on the income tax cases, today we will discuss a very important case on the additions of penny stock. The issue before the Honorable Nagpur I.T.A in the present case was that if the assessing officer grossly fails to impeach the credibility of the evidences submitted by the assessee during the assessment proceedings, so whether in that case the additions made by the learned assessing officer just on the basis of preponderance of probability or just on the basis of simple allegations without any proof that the assessee was involved in price rigging of the shares is justified. This issue has been taken up by the Honorable Nagpur I.T.A in the case of Deputy Commissioner of Income Tax versus Naresh, Laxminarayan. This case is reported in 126 I.T.A Tribunal at page number 317 and the date of the judgment is 21st March 2025. The present case relates to the assessment year 1516 to 1617, and in the present case it was the assessing officer allegation that the companies in which the assessee has dealt are those companies which are involved in accommodation entries or involved in penny stock transactions. It was the allegation of the assessing officer that the assessee has fraudulently involved in the booking of long-term capital gain or short-term capital loss. When the notices were issued to the assessee, it was the submissions of the assessee that the notices have been issued on the change of opinion and there is no new material in the hands of the assessing officer. The assessee has submitted various documents during the assessment proceedings which involved that the shares have been purchased and sold through Bombay Stock Exchange. The payment has been made and received through banking channels. There is no involvement or there is no negative report of the SEBI about the companies or the assessee. There was no price rigging by the assessee, but the additions were made. When the assessee was before the CIT appeal, the CIT appeal noticed that the assessee has given a mountain of evidences during the assessment proceedings which involved shares were purchased and sold through the Bombay Stock Exchange. The shares were delivered in the demat account and the assessee has dealt with those brokers which do have good reputation in the country and the payments were made through banking channels. The CIT appeal noticed that there was no proof of the price rigging either by the brokers or by the assessee, so the CIT appeal deleted the addition made by the learned assessing officer. The revenue filed the appeal before the tribunal, and when the tribunal heard the matter, the tribunal said that in the present case, the facts mentioned by the assessing officer are illusory and totally baseless. The tribunal said that when the assessee has paid tax at the rate of 15% under section 115, under section 111A, then the reclassification done by the assessing officer of the income under section 68 read with section 115 BBE is without any basis. The tribunal said that in the present case, the cavalier attitude of the assessing officer could not be countenanced. The tribunal was of the very considered view that in the present case there is no scope to tinker with the well-reasoned order of the CIT appeal. The tribunal said that in the present case, the clean chit given by the Securities and Exchange Board of India is like a final nail in the coffin and leaves no doubt that the transactions of the assessee are genuine. The tribunal also said that in the present case, since the tax effect is also below the 60 lakh and there is no allegation by the assessing officer that the assessee is a part of an organized crime of tax evasion involving penny stock and accommodation entries, so in that case, on that ground also, the appeal of the revenue should be dismissed. So friends, this is a clear-cut case where the tribunal has given the relief, where the additions have been made by the learned assessing officer without impeaching the credibility of the evidences submitted by the assessee. At the end of this video, once again, I am repeating the name of the case. The name of the case is Deputy Commissioner of Income Tax versus Naresh Laxminarayan Grover, and this case is reported in 126 I.T.A. Tribunal at page number 137, and the date of the judgment is 21st March 2025. Thank you, friends.